Welcome to the Sunday Report. I hope you all hugged your mothers. I had a wonderful time with the family this weekend. Came back to do the Sunday Report, and futures are melting down. Let's go ahead and talk about it. Jump into our weekly recap real quick. So if we pull up this right over here, I'm going to screen one, and we can see that futures are melting down right now. Bitcoin's melting down. It's currently at 34,000. We see the S&P has slipped. If I move my face right here, you can see IWM actually has dropped to below 180 at 179, which is an all-time low. Not an all-time low. It's a low for the year, though. I mean, look at that. That. Now we're starting to see real blood, and I think it will carry over into the S&P. And, if we see a crash, I expect us to revisit these COVID highs, which we've talked about previously before. That's if there is a crash. If we just see a normal meltdown, I think 380 could be support. We'll see. Now, DXY is continuing to march up. Be aware of the dollar milkshake theory. Remember that ends at a global financial crisis. And TLT has been burning a hole in my pocket. And if it wasn't for, this low liquidity, high volatility environment on the S&P where we can, this right here, if you caught this, these are literally 400% days on daily scalps. This huge rally right here, this was after the Fed spoke. And then that, we talked about how this was pretty much a short squeeze. And then we see this meltdown right afterwards. I told you, I tweeted on Twitter, I said, if this actually breaks, because you have this perfect triple top right here, if this actually breaks through it, it could easily shoot up higher. And instead, we just saw it completely give out, which I didn't find that surprising. I didn't, to be honest with you, I was really even skeptical of saying that it could continue to march up. But instead, we saw that chop I was expecting. Well, we saw a rug pull into a chop. The rug pull was this serious, obvious stance that people have just immediately reset up their shorts. I thought we might get a delay, a pause, a slight rally up because it seemed like a lot of, this is some decent volume here. But this is even, and then look at this sell-off. There's not even a lot of volume in the sell-off when you look at the rally. So it looks like a lot of people are starting to catch up, and then, realizations start to come into fruition. And I think we could see big volume on Monday as people start to panic out of their positions because they start to realize how dangerous this market environment really is. And, one of the things I'm also looking at here is we're not really seeing UVXY move in the futures either. And we could take a look at VIX actually and see what that's doing. Okay, so we're below the 31 mark. This is the danger mark on VIX. When we get above 31, that's when you're going to see blood. UVXY is already over that. 16's been the range that we've been looking for true blood, and you could see that played out on SPY as well. So when you see that break, that's when okay, we're in dangerous conditions right here. At least that's how it's been playing out. So if we get this above 20, if we get above 20 on UVXY, get ready. It's going to be rough. So Freaker trading went pretty well. Wasn't playing a lot of companies. Was just mostly playing SPY. Didn't really have a reason to play companies. Did kind of bleed a little bit on TLT. We did set up some other plays that played out really well. Of course, in your Discord, you can see those. If you want to know what the TLT position I have that I am holding through this bleed, you can check that out on there. Remember. Because I saw some posts on Twitter actually today, while everyone was taking a nap after eating too much for Mother's Day lunch, I was kind of reading through Twitter, and I saw a lot of people saying like, oh, TLT will for sure go down. But let's actually think about that because we've seen the forward guidance be rough from most companies. It's been really shoddy, and we've seen that we've already had a surprise to the downside in the first quarter. If we get a downside in the second quarter, this trajectory that the Federal Reserve is continuing to place themselves on. And let's think about also what they said last week. They said, even if we see the numbers come down, the minimum we're going to do is 25 point base hikes, if I can put words together. So even when the data continues to improve, they're going to continue to hike, and they're wanting to continue the pace of the hiking that they're at in an environment where we're seeing surprises to the downside on the GDP. If we see an even worse surprise to the downside in second quarter, which from the guidance that we've seen from some of the major companies, even Apple's come out and said, hey, we're for sure going to have supply issues come in June and July. And then last week, we'll talk about in our briefing some of the poor news that we've seen. If we compile all this data, it seems like there's a really strong case for a weak second quarter, which will cause the Fed to likely have to change their outlook and their path forward, which will bring a turnaround in this bond market. And that is kind of why I have that trade set up. Now, I'm early to the trade because I'm trying to maximize my potential and because I'm okay with the bleeding. I'm not going to average into this trade anymore until it starts to play out in my favor. Right now, it's going to bleed. When I see this trade go back in my favor, I'll start allocating back into it. If you want to know what that trade is, visit the Discord. That's where all that information is. We're trying to keep members informed, and like with these Sunday's reports, all being public, I'm trying to share more stuff in the public as well. And activity in the Discord has been spiking as well. So if you're one of those members who's been typing the Discord, I love you. You are awesome. We're climbing in our numbers again, and so I'm hoping we get a partnership soon. But the activity has been great in the Discord. And a lot more people have been coming in the stream. If you listen to the last live stream, you might have seen that there was 4 other traders in there with me, and we've had even more in that in recent times in the Discord as well. So it's been really awesome, and I really appreciate you doing that. Anyways, let's go ahead and talk about the economic data points for the upcoming week. So real quick before we get into the economic data, I want to give a shout out to Marlo. You might see him in the Discord a lot. He's actually a personal friend of mine. He is a CFA. He works for an institution. But he's been also seeing these reports that we've been seeing where Biden wants to give remarks on inflation, and he thinks that means that there's very hot numbers incoming. And I just want to say that I 100% agree with that. So when we're talking about this economic data that's coming up, we'll pull that up right now. We have this PPI numbers coming in on Thursday and the core PPI numbers coming in. And I do expect that to be rough, inflation rate, core inflation. I expect this to also continue to be rough, maybe even rougher than people expected. Because remember, if we go back, we reversed 3 months, we had a perspective from most experts that were saying, okay, it'll start to come around right about now. But then China shut down, 40% of their economy shut down, and that's going to cause extra supply chain issues. And so we're starting to see this actually be expanded outwards. Now, the big question is, and the $1 million answer would be, when does this actually dust begin to settle? And that's really hard to answer. Some people are saying that this inflation is already out of control, that the Fed moved too slow. But one of the things that we can continue to say is the Federal Reserve will likely continue with these rate hikes, even though chances of recession continue to rise. And that's rough, okay? So let's go ahead and break this down. Remember, all these Fed speeches tend to be really bearish. We have Bostic coming out on Monday. Seems like we also had Bostic talk this afternoon. That might be related to the gap down that we saw. Monday's going to be pretty quiet after that. Consumer inflation expectations are really important. If you saw me tweet, I was talking about, data is one thing, but the consumer sentiment tends to be a revolving door effect, where as consumers get more and more bearish in their sentiments, it actually causes more and more issues, because then they start tightening their spending, and then it slows the economy. Just the expectation of it can sometimes cause the action of them spending less, which then causes the economic slowdown. So that's important to keep in mind. Okay, so then we'll come into Tuesday, then Wednesday. Remember what I've said; these are going to be the big numbers. Thursday, we talked about that. We have some more speeches. There's been some mixed reviews over the jobless claims that we got last week. Some people are saying it was really bad. Some people are saying it was not so bad. I'm not going to really speak to that. The overall market environment's rough. So, nuances like that only matter so much. This consumer sentiment report will be important, though. We want to see this improving. I don't expect it to, though. I think it's going to continue to decline. Especially, it's going to be important to see what Biden says as well. So that pretty much covers the week. Really short, just to the point on this. And we'll continue to provide more reflections on this throughout the week, especially in this environment. It's going to be more and more important to keep in tune to what's going on politically and how that consumer sentiment looks. So this is usually the part of the report where we go over company earnings that are coming up. But I think this kind of sets the wrong precedent, because I just want to reiterate that I'm not doing any company picking right now. I did kind of try to pivot to some growth names after I saw the market start to rally, because I thought it could persist. And then I quickly had to pivot out of that when I saw that the market continued to melt down. And that was a quick reaction out of me. I was trying to get a little greedy with my positioning, even though I'm overall bearish, and I got burned slightly for it. I was pretty quick to move out of it. Remember, UVXY is really important to watch, especially when SPY starts to melt down. You could see the confirmation mostly in the broader move of the market. If you see a quick melt up like that and the next day starts to melt down, look at how the overall market's reacting. Is everything melting down with it? Because then you might want to start rethinking, like, okay, this might not just be a small drawdown before we go back up. This could be a broader move down. And we saw all the signals for that after that Fed meeting. We had that melt up. So it was a quick pivot. It was easy to quickly pivot, is what I should say, out of that position and start to go back to the bearish trajectory, which was a smart move that was very profitable. So that's what we're saying. So I'm not doing much company picking right now. So I don't really want to go over the company earnings. Now, if you would like me to continue to go over company earnings, give my outlook on some essential companies that I keep an eye on and have watched for years, I will incorporate that back in. It's just right now, I noticed that when I look at where people drop off of the show or where most viewership is, it seems like a lot of you skip past that part and you want to hear more about the briefing and other aspects of the report. So I'm just going to react to that and say, okay, I feel like it's not that important personally anyways, because I think this broader market's going to move to the downside, and I'm not doing a lot of stock picking, so I'm not going to spend time doing that. If one, you aren't wanting that information, and two, I just don't think it's as relevant in this market environment. And I get it, there's still a lot of people that are very popular. They want to pick this company, that company, well, this price and that price, and these, if you compare these share prices, at the end of the day, this market's going to move to the downside. And so if you have a broader move to the downside, if you're buying SQQQQ, or if you're going for UVXY and looking for those hedges, maybe Yang, because China's been doing so rough, those are going to be just broader profitable moves that you can make in a bearish market environment if that is your outlook and perspective. And for me, that is personally my perspective. Remember, this is all for educational purposes. So let's just go ahead and hop right into our briefing part of the report. Okay, so the first thing I want to cover is we got some mixed signals out of China. We got some reports saying that they were going to come out of lockdowns. We got some reports saying that lockdowns would continue. And then we got a speech from President Ma, who is still very much like we must not have any COVID at all. And we also saw a very big report that I mentioned last week about Bill Gates saying that there could be a new dangerous variant on the loose. And we also saw the White House talking about COVID more as well. So this was interesting to me, even though we saw no follow-up news on that whatsoever. It seemed like some Russia-Ukraine news instead started to enter the picture, along with some reports that we saw that Putin might have been in a coma and that the head of the spy organization there might be taking in charge after him. Now, I saw no verification on this, although we're seeing Putin continue to make announcements. So that might have been fake news that I got caught up on. Remember, I'm just putting these reports out as they come to me. I'm not, I'm not a reporter. I'm a day trader. So let's just remember that. Now, one of the things I will say is that directly from that speech in China, we saw Ma kind of waving the flags of war and kind of giving out a rally cry. And it seemed like it was something that they were prepared to move forward for if they were going to continue to have issues with China and issues with the economy and issues with the West, because they still believe that we have a poor perspective on what's going on in Russia, Ukraine. And we've seen them pair up with Russia when it comes to the sanctions that they're doing and the exports that they're ending with the Western region. So this is big. And I think it's important to throw that out there because this could be a signal of a future move on Taiwan. Now, when that occurs, I'm not sure. I felt like the window's kind of closing on that for them wanting to make a move, but that's just my, I'm a day trader. So that's just my perspective. Of course, I'm always doing networking, trying to talk with people in this situation, but I still think it's very important to keep that in tune. The other thing I would like to talk about is crypto. Now, Bitcoin was being really stable. I mean, crazy stable. And I was starting to kind of build up a new narrative around it. I was like, okay, it's outperforming gold really well right now. Everyone's saying it's going to melt down while the market's having lots of turmoil, tons of volatility. The most volatile asset that's supposed to exist right now has actually been relatively stable. And then heading into this week, we see this big meltdown out of Bitcoin, and it just moves like that. And even people like Peter Schiff, who hates Bitcoin, was starting to comment on that as well. So I think it was big for a moment that, like, okay, maybe something's going on here. Maybe there's something a little deeper. in play. But now we're seeing that meltdown. I guess the thing I would say here is that it is a weak cycle for Bitcoin. And I'm only talking about Bitcoin just because all the other cryptos tend to trend with it, even though I think there'll be some divergence as the space continues to mature. And I expect that maturity to actually occur later in the year. If you watched our yearly predictions, I think I got a little ahead of myself. We've seen some of those not really play out. In some instances, there's been some small wins for some of the coins I mentioned in that yearly prediction. So, it's kind of played out, but not as much in price action. So what I'm thinking here is that we probably will continue to see Bitcoin with the market. If the market does crash, we'll probably see Bitcoin move with it. And one of the things that I was kind of building up a narrative on when I saw that stability is that, okay, maybe it doesn't move with the market. And there's still a chance of that. There's still this huge conversation of, oh, it's the perfect inflation hedge. Oh, it's the perfect investment to have when people aren't trusting governments and people may think that central banks are making really poor decisions and the way that these issues are being handled. And as that mistrust continues to build, these assets will become more and more appealing to big investors, especially since, let's remember there's all these fake fruyus, which I love that word, but basically fake gurus that are saying like, oh, big money's in crypto. Big money just bought this. Big money just bought that. You got to chase the big money, see what the big money's doing. Remember, if big money makes a move here, when I say big money, I mean like Apple, or I mean like Bill Gates, or, Warren Buffett, who would never buy Bitcoin because Warren Buffett's old news in my opinion. But if we see big money actually make a move in crypto, they will advertise it themselves, not some random person on social media. Okay. And that's really important to keep in mind. Okay. There's never been an instance where big money makes a move quietly when they can benefit from the fact of advertising it everywhere. Okay. When big money makes a move, you'll know big money made a move because they'll tell you they made a move because they profit from you copying their move. Okay, so these people who come out and say big money did this, or big money did that, or big money's doing this, or smart money's doing this, it's like, well, unless they're trying to get out of positions in a very sneaky way, that's not a big instance. Remember, if you're looking at insider sales, not as important as insider buys. I just want to throw that out there as well, because you might think, oh, this insider just sold a bunch, and that could be the secret trying to get out, but that's typically not what's playing out. Sometimes these directors are just selling a bunch of shares because they want to buy a new boat. It has nothing to do with what's going on in the company whatsoever. They just want some extra cash. So those buys are what really matter, and those buys usually get advertised in big ways. If Apple buys Bitcoin, they're not going to buy a bunch and then say nothing about it. They're going to buy a bunch, and then they're going to put it everywhere. You're going to get a message on your iPhone that says, hey, we just bought Bitcoin. Why haven't you done it, loser? Something like that, because they want you to copy that, because they want good, quick returns on their asset, so they look like they made a smart move. Otherwise, it could negatively reflect on them, negatively reflect on their portfolios, or negatively reflect on the people's trust in their decision making. So that's, and you saw someone like Elon Musk do it, and then didn't play out well for him. But Elon is more of a risk taker and more open than many of the other big actors that were looking to make moves in this space. So I wouldn't set him as a precedent for how this will play out in the future. Although he did announce it just like I expect everyone else to do. So I think that's important to keep in mind. So Russia is another player that we got to talk about. The invasion's continuing, and I think as we see the end of this takeover of Ukraine, we're going to start to see whether there is some evidence of some poison claims that Russia might try to continue their engagement outside of just Ukraine. Now, if this does occur, this could create a window for China to make a move, although it's really early to say that any of this plays out whatsoever. But remember, as a trader, we always want to kind of cover some potentialities. And like I iterated before, as soon as we saw that rally wasn't going to happen, I moved out of a lot of these risk assets and I moved back to my full bearish positioning. Although I'm still very bullish on the commodity markets and energy. But I think that, when we look at this environment, probably for the next year, or at least the next 9 months, 6 to 9 months, we're going to see a lot of turmoil in this market. And we could not see another true bull rally for months at this point. And I'm saying that with a pretty high level degree of confidence. So it's great for traders if there's low liquidity and high volatility. So long as the option market continues to hold up, it could do really well. But one of the things that we've continued to see, and I've been pointing out daily to people in the stream, is like, look at all the call buying we're still seeing. Like, people are still not catching up to the reality of the situation in this market. We're still seeing even amounts of call purchases to put purchases. The thing you want to think about here is that call purchasing is usually going to be less than put purchasing in a volatile market, even if there's a good reason why people are bullish. So when it's even, that means it's actually favored on bullish bets. Why? And that's because hedge buying. Because even in bull markets, people are going to buy puts. So there's very rarely any market environment where there's no put purchasing, because people are always hedging and option sellers are always, participating in both sides of that market to try and collect some passive income through their options trading. So when I see that that's even, but I see that the market is clearly bearish and the data's bearish. And I mean, let's reiterate, real estate's bearish, gold's bearish, bonds are bearish, treasuries are bearish, crypto's bearish, currencies are bearish, except for the dollar. It's rough, to have a bullish perspective, to still see so much call buying makes me think that there's still a lot of irrationality in this market. And it's really hard for me to build any bull case for even, and like I've said before, I don't like to scalp trade in a direction that's opposite of my greater macro view, even on a daily chart. When that market fake rallied up after the Fed meeting, it didn't chase with calls, even though it looked pretty clear it was going to melt up. It's just because it's just not my trading style. I like to play in line with my fundamental analysis. So I'm just going to throw that out there. That's always going to be my perspective, the way I paint my picture and how I'm talking about things. So I think that there still needs to be some catch up from a good portion of the market and to the reality of how bad this market is. And so remember, and another thing to remember is retail is still, slightly less than 1/3 of this total market. So the retail traders they're still in this perspective of, oh, this is the bottom. Okay, this is the bottom. Okay, this is the bottom. Okay, this is the bottom. When that stops and we stop seeing chases on the rallies, this market will just bleed down and you'll start a lot of people panic out. We still have not really seen that play out. And I'm watching because remember, option trading is historically high still. I'm watching for that to shift in sentiment. And when that starts to shift, then I think that when the market becomes solidified in its bearish perspective, that's when I think we'll start to be able to develop a narrative for what a bearish case is. And when we start to see those retail investors and traders say, oh my gosh, this is the bottom, this is the end, it's end of days, the world is falling apart, then I'm going to go back to my bullish sentiment. That's when I'll make the move. That's when I'll say this is the time to get in. But I still see this argument going in, and that's just people being emotional and seeping into their emotions. But usually you want to do the opposite of what your emotions will incline you to do. So when I see uranium in the headlines, it's a great time to buy, I end up selling, and I end up selling the short-term top. This is the same mentality that you can repeatedly use for market bottoms or market tops. When euphoria is at all-time highs, the market usually hits a top. When it's doomsday and everyone's panicking, that's usually the bottom. Okay, so with the euphoria still high, people are saying, oh, this is the bottom. But I look around and I see all the blood and all the turmoil going around everywhere. It's like, I don't think so. And, there's not much TA you need to support that other than just realize the patterns that persist throughout history. So I just want to, get your mind set from that perspective. Start to think like a trader thinks. And I guess the thing I want to add to that is that maybe technology will eventually reach a point where we can raise the base level of all participants in the market. Now, I'm kind of framing that from the reference of video games, where if a video game exists for, like a decade, let's say a Call of Duty or a League of Legends, the average player level actually tends to rise. And I think that with greater access to communication and the spreading of good ideas and the fact that more people are becoming open about their trading processes in communities like the one that we're trying to create or have created at this point. We're like 6,000 strong. So I think as these continue to rise, I think that we could see player level increase. I'll probably do a whole separate video on that, but that is something worth considering when it comes to market trading. Although markets are way more complex than a video game, as there's many different games that you can play in the market. But we'll do a whole separate video on that, I think. Maybe just like a little podcast format. I'll just talk about it for like a half hour or something. So that about covers it for the briefing. I hope you enjoyed. Hope you found it informative. As always, remember, if you join the Discord and join our subscribers, which are contenders, you can be in tune to all my trades, but also the rest of the contenders. Also get reports from Marlo, get his perspective as a CFA and some other professionals in the Discord. At this point, we have hedge fund owners, vice presidents, big crypto whales as well have now joined the Discord. So that's been really cool to get their perspectives on stuff. And you can get all of those if you just click that link down in the bio and join the community. And of course, this will probably be a week where I put out many reports during the week, especially if we get big news on these markets or we see some big players make some moves. When I'm talking about, Russia, China, Japan, and such. And there's just so many conversations and so many narratives to follow. I hope I've boiled it down in a way that touched on just the important details. Of course, there's so much going on. It's really hard to compile it all in a video that doesn't end up turning into like 3 hours long. So, I am skipping some information. But if you're in the Discord, you don't miss any of it. And I mean that. So I hope you find it helpful. Remember, you can always ask me questions there. And I will see you next week, but very likely sooner than that. Hope you enjoyed. And good luck out there. Remember, the other side of the bear market, when it's over, is a bullish rally. And we'll be here for that too. And when I get bullish, boy, do I get bullish. I'm still a perma bull. Don't forget.